I want to buy a house. We want to buy a house. When shall we buy a house? What do we need to buy a house? What is the great or ideal credit score? How much money are we going to need to buy a house? What do we need to buy a house? Is it a good time to buy a house or not? And who going to help me in this process? And many, many more questions. All these questions are very important, and I know how you feel, and I understand. Hi, I am Nasir Qureshi, Realtor Daddy with Texas Signature Realty in Houston, Texas. This is a new series of real estate tips that I will share with you, with the public every week. So, last video we talked about, or another video if you're watching in the future, that we talked about the most important investment that anyone can do is in real estate. And number two, the mindset, uh, making the mindset. What is the real estate mindset? Please watch the other video about a little bit detailed conversation. In this video, we're going to talk about these questions that I just mentioned and many more. It's, it falls under readiness, right? So the definition, legal definition of a buyer is someone that is ready, willing, and enable buyer, right? So let's talk about readiness. So are we ready or not? So wishing to buy a house is one thing, and being ready to buy a house is second thing. So what do we know? What do we do? Where do we start to be ready? How can we know that are we ready to buy a house or not? The very, very, very first thing that since we made our mind that yes, I want to buy the house, we made a mindset correct, and you're not going to stop until you buy the house and be there in your dream home. Open the door, smell the air, look at the beautiful colors and house and furniture, and this is the what you want. We have to talk about the readiness. So draw a line, starting line, right? Do an inventory. Find out what do I mean by that? Find out what is your current situation, right? To buy a house, we need two things. One, we need money. Two, we need credit score. About the money, let's say. Most people, including myself, right? We just don't buy, hey, $400,000, $300,000 house. Here's a suitcase full of money. Give me your house. We need financing, right? So before we go and knock on the door of lender or bank or mortgage company that, hey, I want to buy a house. I need money. So they want to know, are we worth of their money? How much money do we make? How much liabilities we have? How much monthly obligations do we have? How much money simply is coming in the house, and how much that is going out, or how much we are saving, how much we have to have, pay the bills, car notes, credit cards, rent, things like that, right? So they look at that. All the lenders look at something called DTI, debt to income, before even we go knock on the doors of any loan officer. We have to find out, one, what is our credit score. One of the best way to find out credit score, and I can't really talk enough about this, that I'm so surprised and astonished that so many people they refer to the third parties like Credit Karma or all these apps, and they to, to for the credit score. But why not go to directly to the three bureaus? Go direct to the horse's mouth, as they say. One, Experian, Equifax, and the third one is TransUnion. Simply just go to Experian.com, Equifax.com, TransUnion.com. If you don't have account there, create a free account, enter the dashboard. Don't pay nothing. You don't have to pay no credit card, nothing. These are the bureaus, and look at your credit score for free. They will show you without running your credit score. Do not run your credit score. Okay. Do not run your credit score. Take a screenshot. Now you know it. Second way to look at the credit score for free without running is all these apps like credible sources. For example, Capital One, Chase Bank, Bank of America, all these apps. They have apps and it shows you their your FICO score. FICO, what is your FICO score, right? So now you know what is your credit score is, and everyone knows the kind of issues or problems that we could have in our credit score background, right? So credit card debts or some charges, or for example, uh, some disputes or things like that, or some people may have reported some false information or some repo or things like that. We all know what's pretty much that. Well, sometimes we, unfortunately, it should not be the case that we don't know if someone put information behind our back in our files with the credit bureaus, and that is just kind of an unfair system. I think that a lot of businesses there just have, they can just file something, a person doesn't even know about it, and most of the people are, we are busy with our lives, and most for the most people, the credit is thing is just on a back burner. We're busy with our lives and responsibilities, and we don't check our credit until when there's a need for it. So find out readiness, your credit score. Number two, find out how much money you have. If you don't have money, then start saving, or where can you get the money from, right? Very simple, on a piece of paper, write down, journal that where can I get, how much money I'm making, how much money is going out, how much I'm saving, where can I get more money? Do I need a second job? Do I need some side gig to make $1,000, $500 a month to save? You're going to need some money to buy a house, closing cost, uh, different things, right? Furniture. Closing costs is also a very confusing term for many people. Closing costs entails a lot of things. The way I explain it to my clients is that some of the closing costs buyer has to pay for it, some of the closing costs seller has to pay for it, and some of the closing costs can be negotiated between the agents. For example, home inspection, buyer has to pay for that, right? The buyer's taxes, anything that you pay, of course, property tax after the closing date when you get the keys, you're responsible for it. Buyer's responsible. All the taxes that before the closing table, before the closing, seller is responsible for it. Survey generally is survey for the house generally is the seller's responsibility, but that's one of those things can be negotiated as well. Uh, and so there are some then there are some what you call it escrow, right? Having money, the insurance, some property tax, and things like that. And homeowner association, if there is any, some of the things that that has to have go with the in the escrow account with the lender, the one you are going to get the loan from. If you have not uh, uh, put down payment 20%, uh, 20% or more for your house. Most of the people don't pay 20%, and that's the federal law. Uh, that if the down payment is less than 20%, then you also have what we call it a PMI insurance, and that's just another insurance. That's insurance for mortgage, right? That also has to be counted for, and 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 it's bundled together in the mortgage payment along other things, and that is also part of your escrow account. And what is generally an escrow account is some essential money that uh, lender in a separate account has to keep it untouched just in case, right? And that's pretty much an escrow account in my loosely simple language, right? So the bottom line is there are so many things when it comes to readiness. The questions that I mentioned to you in the beginning of this video, keeping it short. Uh, we're just going to talk about just two these things. Find out, know your starting point and where you need to go. Very simple. So draw a line, write it down where you need to go, where your credit score is, and where your money is. Once you find out where your credit score is, find out what can you do to bring up your credit score, and find out where your money is, how much money do you have, then find out where and how and what you can do to get more money and save that. I think that's a great start for the readiness to buy a house. I am Nasir Qureshi, Realtor Daddy in Houston, Texas. And remember, time is money, but real estate is both. Thank you. See you at the top.